Any fool can buy high and sell low. The wise man knows it's all in the timing. And my friends, that is what we teach here every day. The timing, following the trends, the weekly vertical crossover, the real magic that we teach. I invented that term, weekly vertical crossover. We found it, we discovered it, we pioneered it here, and it is a masterstroke as far as trend following goes. We are not short-term traders. We're not day traders. We don't look for anomalies in the market, market inefficiencies. We look for trends. We trade for many, many, many dollars. When you look at the Qs crossing over point back in May, it crossed over at the end of the day on Friday, the 1st of May, at $215. What is the high of highs? $269. Now, are we saying you could have captured all of that? Well, it's possible, but not probable. But what about just a chunk of it? What about just a piece of it? That highly probable. Now, again, we're not a stock calling service. We're an education firm. We want you to practice trade with us. And we've got lots of great information to share with you today for you, for everyone who's a subscriber. And you do that for free going to chartingwealth.com and signing up for our daily reviews. And of course, tomorrow, our weekly review and forecast. We have a plan before pulling the trigger. That is the special training in your show notes for all subscribers. If you're not a subscriber, need to become one, because you're never going to get our classes on options, that 3-part series, Options Made Simple, the Charting Wealth Way, that is highly in demand. We give that out for free, but only to the folks that subscribe. So go there and sign up. Let's jump into these charts. What do we see happening? Remember yesterday when everything was up but one thing? Well, today everything is down but one thing. It is the exact obverse of what happened yesterday. The only thing up, 20-year bonds, everything else down. Now, let's jump into these charts. First, the S&P 500. We can see that it's a nice green up candle reaching a higher high here lately. We see that pushing up. Price percent oscillator steady in its rise. Derivative oscillator still losing some momentum. Go to the 2-day chart. We had that 2-day crossover, and again, it was down a little bit for the day, 0.38%. Not pulling away rapidly from that, but again, the 2-day crossover point somewhere around 318, high 321, so that's not too bad. Derivative oscillator gaining upward momentum, but pay close attention to that 2-day chart. We look at the half-day chart. That's where we see where we hit the high after the crossover, and then where things have slid sideways and, well, lost some of that momentum. Check out the price percent oscillator. On the half-day chart, it's flat. Derivative oscillator looks like it's flat, losing a little bit of energy. So if you're in that 2-day recross, not our favorite way of getting in, but again, it offers possibilities. Pay close attention to what's happening on the weekly and that 2-day. You don't want that trade to go against you. Again, it wasn't down much today, but pay close attention on Friday. Now let's move to the Qs. It was down 0.6. Gosh, it's hard for me in this light to see. I think 0.68% for the day, reaching a higher high this week. But look at the price percent oscillator losing some momentum on that weekly chart. Derivative oscillator also. Go to the 2-day chart. Check it out. And again, losing lots of momentum after hitting a high back on the Monday, Tuesday 2-day candle. The Wednesday, Thursday, turning from a green up candle down to a red spinning top with lots of movement on the bottom, that bottom wick, quite strong. Derivative oscillator consequently heading down. Derivative oscillator and the price percent oscillator hadn't crossed over going down yet, but keep a close eye on it. Oh, also, check out it pushing through the 2-day trend line. Now, the half-day chart, we can see where that massive drop occurred on Tuesday morning, and then really sort of sideways and down since then. Down in the morning, a little bit of recovery in the afternoon on Thursday. Price percent oscillator is still just stroking down. Derivative oscillator negative also. So keep your eye on that 2-day chart also in particular with that weakening that we see on the price percent oscillator on the weekly chart. We go to bonds. Bonds up for the day, 0.47%. Green up candle for the week, but look at that price percent oscillator right flat. Derivative oscillator losing downward momentum. 2-day chart, price percent oscillator still going up. Green up candle not reaching a higher high. Derivative oscillator gaining upward momentum. And that 4-hour chart had been sort of laminated at the end of the day, pushed over going down on the price percent oscillator. Derivative oscillator gaining downward momentum. Now again, we're waiting to see what's going to happen. Is the weekly going to cross over going up or the 2-day going to recross over going down? Don't know. Don't really care. We're just waiting to see what happens. We don't do a trade when the 2-day's moving in the opposite direction of the weekly. They both have to be moving in the same direction. When it sorts its way out, we'll look for a trade. But until it does, we hang tight. Go to gold. What's up with gold? Well, gold had a weekly vertical crossover back on the 26th. Gold down for the day, 0.95%. I guess that was that of our 4 big charts. That was our biggest downer. I'm still trying to read that. Yes, 0.95%. So we had gold cross over going up back on the 26th. And of course, it hit its peak on the week of the 10th. This week been struggling, has not hit a higher high. Check out that price percent oscillator has gone flat, never pulled strongly away from the red signal line. Derivative oscillator gaining upward momentum. Go to the 2-day chart. And of course, we can see where it went from a green candle to a red spinning top. Hasn't crossed the 2-day trend line yet, but sitting there right on it. And that derivative oscillator's heading down, so just be careful. Keep your eyes on the prize. Be very careful that you don't see a crossover and not pay attention to it. If you see that 2-day chart crossover going down, that derivative oscillator, the leading indicator is also losing a lot of energy. So you see violations of the 2-day trend line and a crossover. Now it could bounce off and move back up again. We saw where it bounced off and moved down back on the 19th. The opposite is also true. So watch that. Look, is possible. Look at the half-day chart. We see down movement in the morning and then an acceleration in the afternoon through the weekly and the 2-day trend line. So again, look at that acceleration down movement in gold. Again, watch, see what the overall effect is on the 2-day and the weekly. Of course, you can take your profits at any time, and it's been a decent trade at this point. Again, you want to always be able to justify taking your profits, but remember, profits, my friends, are profits. Okay, in those practice trades. Now, that is where we are. Thank you to our recent Patreon members. We so appreciate you helping us. It's those Patreon folks that support us day in and day out, help pay for the bandwidth, the texting service, all those things. Thank you. We have special trainings every month for our Patreon members. It is a live question answer session where we give you a chance to submit the ETFs and stocks you're interested in us looking into for you for trackability, practice trading, and such. And then we have special in-depth trainings for you. Of course, we're underway with our Accelerated Market Mastery course. Those students are involved right now in their first lesson of the first month of the 3-month training with 3 months of follow-on question and answer sessions. And of course, we appreciate all of them. We appreciate you. If you hadn't purchased our book, 2nd edition, Charting Your Way to Wealth, we have a copy waiting for you if you live overseas. You can't use the Square account that we have set up for some reason they won't allow us to clear foreign credit cards, but email us cw@chartingwealth.com. We'll send your book wherever you are in the world. We'll send you a PayPal invoice first. Pay that. We'll get you an autographed copy right out. Live in the States. Follow the link in the show notes to our Square page and we will get you a book. Now, let's jump into Bitcoin, down 1.43%. Look at Bitcoin. We've been talking about it crossing over, going down, and going short on Bitcoin. Sure is getting close. Derivative oscillator is negative. Price percent oscillator getting close to crossing over, going down. Don't know that it's going to be a weekly vertical crossover at the end of the week, but it is losing momentum. 2-day chart, it has been going down since it crossed over back on the 12th of June. So again, down, sideways, down, sideways, down. Not good to see, but that's what it's doing. 2 days of strong down movement in Bitcoin on Wednesday and Thursday. So keep your eye on it. If you want to do a practice trade shorting it, again, if you're interested in Bitcoin, it pays for you to learn how to track it and how to practice trade it. Very, very valuable to you. These charts work for Bitcoin. You need to practice trade them and learn how to follow it if Bitcoin is something you're interested in. Let's move on to real estate. Down for the day 1.20%. See real estate sliding sideways. And of course, this week, red down candle forming. Price percent oscillator still positive on the weekly chart, but flattening. Derivative oscillator losing upward momentum. 2-day chart pulling away from the red signal line, heading down on that price percent oscillator. Derivative oscillator losing downward momentum. Green spinning top, indecision tending up. Look at the half-day chart. We can see where it had popped up and then moving over, going down, hasn't crossed over yet. So again, like we talked about earlier, you can't have the weekly in one direction and the 2-day in another. They both need to be going in the same direction to have a trade up or down. Folks, if you don't know what we're talking about when we talk about shorting, you don't know what inverse funds are, at the end of today's video, I'm going to attach inverse funds, how to make practice trades when markets are crashing. I want you to learn that information. Check it out. It'll be attached at the end of today's video. Now, let's go back to the weekly chart. And lastly, we go to oil. You thought I was going to say gold, didn't you? What do we see? Oil is down for the day 0.44%. We do have a green up candle for the week. Price percent oscillator still tracking up. Derivative oscillator losing a little bit of momentum now. We go to the 2-day chart. Again, not quite flat, still heading up a little bit. Latest 2-day candles, a nice green up candle, no wick on the bottom. Derivative oscillator losing some momentum. Look at the half-day chart. Trying to cross over, again, struggling in the morning, pulling back in the afternoon. So we'll just see what oil's going to do. Let's check it out on Friday. Those of you practice trading it, again, of course, pay attention to that weekly and that 2-day, and let's see if oil can keep it going after that weekly vertical crossover back at the beginning of June. That's where we are, folks, as we end the day. Don't forget, tomorrow, comprehensive review and forecast. That will be coming out for you. Help you look at what happened over this last week and how things are shaping up for the next week. Buy the book. Be a Patreon supporter. Help us in every way you can. We do this for free for you every day. God bless. All the best from the whole team at Charting Wealth World Headquarters.